Hello, everybody, and welcome to the Plus Three Futures and Commodities show. Happy New Year to everybody as we are recording here on January 3rd, Saturday morning. The theme for today's show, I think both globally and in the markets is, change is happening. The calendar changed. We have big cycles ending. We have new cycles starting. This is going to be a year of action and change. And so, without any further ado, let's jump in. I see the S&P looks to be repeating something, Barry. What are your thoughts here on this as we enter into 2026?
Well, yes. Well, Happy New Year, everybody. And let's get started here. Some of the reference in our last week's podcast was kind of short, but if you guys didn't catch it, it'll be worthwhile catching it because we're spreading it through. Yeah, the pattern you're talking about is, if you take this low, it's sort of a mini ABCD, right? Low, high, and then the higher low, the higher high. If you take it from this low back in November, we have a low, high, higher low, and a higher high. And very similar. So it's a little bit, obviously, we want to be on top of this, see which way to swing. Is it all going to repeat exactly? Well, you know what happens as soon as we find analogs, they kind of peter out. So we have to be careful in jumping on things, but there's nothing wrong with watching them, right? See how the alignment comes. It's all part of how patterns unfold. Let's keep an eye on that. In the meantime, let's take a look. Last week we talked about this 270 that was coming up, 270 by 270, and saying how ideal it would be. I mean, it would be textbook, obviously, if we can get up to like 7,007 or even 7,000, by January 1st. And we were close. I would say, given, how markets work and how they're not always textbook and perfect, we got pretty close to the 270, especially given the holidays and Christmas and New Year's and closures and half days. And so we want to treat this with a little bit of caution. And looking at the pattern, if you want to look at compare it to the one earlier this year, I would say, we want to watch this, but initially we want to watch to see, obviously we want to look where support might come in. And looking at the next counter trend, counter trends don't have to be huge ones. If there's a big move coming, the counter trends are pretty easy to spot, and they come early on. So there was a counter trend, after this high, right? There was a counter trend right there, see on the November 3rd, and that got us the fast part of the move. And then we got the second counter trend, which was a lower high from that, and that dropped. So you want to watch it, along those lines, and not try to be too brave and try to catch falling knives kind of a scenario. And over here, we had the initial drop, and the counter trend was on February 26th, and selling the low of that was that's what got the whole thing started. That makes sense, Ben? You know what I mean? That's what we do all the time anyway, right? Even
Yeah,
during the day.
and we do that to create a good risk reward on the entry, right? Because
Absolutely.
if the top of the counter trend bar that you entered in gets taken out, then you're done.
Yeah.
You gotta reattack.
Otherwise, it can open up very nicely, especially if the highs are confirmed, right, with some kind of square or whatnot. And as we go along, you'll see what kind of evidence we have. And last week we did talk about that. We talked about what kind of a nice bull run we've had, and now we're getting close to 7,000. We could tap that and reverse. Now we didn't quite tap that and reverse on the cash, but on the futures we got pretty close. The main thing here was the reverse, right? We want to watch the reversal. We talked about, when it gets into these zones where there's resistance or timing, we want to look at the reversals and the sort of the quality of the reversal. And this is on the last week's podcast, so you guys can catch that. Get moving. We had a bit of a reversal, and Friday, took a big move to the downside, and we have our old support level here at 68.20. Obviously, if we stop above that and then reverse back to the upside, this was just a sort of a holiday low liquidity, sort of a some kind of a pullback, right? A little bit of a correction, consolidation, you want to call it. So that would put the market back in a very strong position. But I think the 68.20 is the level we want to watch. If we get stuck below that, kind of like what happened in December, we got stuck below that and we traded lower. And of course, that 67.27 level held it right there. So these are the two levels that we really want to watch. If we hold above 68.20, fine. That was just sort of a end of the year thing. And now we're back on track to see if we can go up and tap 7,000. If we get below 68.20 and can't really recover quickly, or we're straddling it, then we want to really watch which side it's going to go on. That would give us another, almost 100 point, right? 67.27 would be the next support for the cash based on the daily chart coming off the April low. So let's watch that. I don't have a whole lot more to add to that because this is really the important thing to watch, right? Because given the high, given the timing, given the closeness of the timing, and the holidays and the days off, and all the distortions on the chart, so we want to watch the price levels very closely to see which way it's going to tilt. Now, if 27 goes, or we touch that, we come back towards 68.20 and we reverse again, these are not good signs, right? We want to watch every counter trend on the way down now. So far, we haven't had any. I think that's what I'm talking about here. Even if we tap this, go up, reverse, the 1 day counter trends are the most dangerous, right? We could have a 2 day counter trend, 3 day counter trend. So watch for that. That's going to be the tip off, right? We want to watch that. And the level that we stall at will give us sort of the depth of weakness or the depth of the counter trend down. I mean, the move down, right? So trend is up. We're looking at this counter trend. Now I'm switching, right? I'm looking about the bigger picture. And now, when back in December, we talked about 27 being important. Why? Because we had all this structural support, from back in October. And this seems to be the area where we bounced, but you can also see the 6,600 level being also important, and this 66.42. So there's a band here that gave us support, because it mainly is 50% of the chart, right? So that's the important level. If we slip through, we have 6,600 to look forward to, and if we go that deep, we take out the low back in December 16th, 17th, and then we get these counter trends. Those are going to be the ones that will really point towards something larger, right? So we want to watch those. In the beginning, sure, we can sell these small counter trends and catch that first impulse down. But like we always talk about, it's that third wave we were trying to always catch, and that's the one that's worth waiting for. And the way you can frame that is by watching the support resistance levels and where the market will tend to stall out and reverse. So that's my take on the S&P. Anything you want to add there, Ben?
I think those levels are really good, especially that 67.27, because that'll take out that previous low, and that'll signal something bigger is happening.
And it's close enough, right, to track. And 68.20, also very close. But let's watch those. And obviously, if 68.20 holds, the next thing up is 69.09 area. We want to see if we can take that out. And the other scenario, we talked about the downside, is that we hold this. We run up towards 6,900 to 69.09, 10, and we have the counter trend up here, right? We have a lower high, and we reverse. So just keep that in mind. Those are sort of the ideal pathways, right? So let's watch these and see how it goes. All right, let's jump over to the futures. Let's look at the continuation chart. Okay, so this is coming off the October 22 low, and I've been tracking this square pretty closely. But we want to track other things too. And I want to show you guys a couple of things, important things. Squares could be working off either one of these lows, which is fine. And that's a much larger picture. But for the short term, let's just go to the April low, which is really where all this sort of got started, right? And if you take a look at that, you can see how we tapped the 270, we got up to 7,000, right? We got right there, and we reversed right on the mark, and pretty close to the 180, not quite there. But the more important thing is that we got to 270, all right? So this is not I wouldn't ignore this. The whole talk about in the cash, talking about the downside and reversal, watch all the level were also because of this. Futures did go up and hit 7,000, coming off the, which sort of completes that leg, right? We were three squares up, and it's kind of an important deal. If you notice, first time we hit the 90, we kind of straddled it and kind of squeezed above it, right? So that's bullish. Second time we came, you could see how we were kind of straddling this 180, but you can see net, we were kind of on top of it, right? And then we moved higher, came back. The retest of the breakout held. And from there, we went right up to the 50%, right up here, almost got to 270, pulled back, correction. And from here, you would expect, if this held, especially after this flush, there's a false break against its low on October 9th. After that kind of a flush, you'd expect this to go to new highs, which we did. Now, I would have expected it to go higher, but okay, fine. We went to new high, did the flush, went to new highs, took out the old highs. All right, I think that completes that scenario, that pattern, because now we're at the end of the square. What we expect is some kind of resistance, and for the market to consolidate, correct, so forth and so on. Now, if we do a correction like we've seen before, then this 66, 35, 38, 68, 38, 35 level becomes important. Okay, so let's watch that. That's one. The other is sort of the quarter square, which I don't have a line in there, but it's right around 68.20. And that's the level we want to watch. So 68.20. And we're watching that for support, sort of like in the cash, that's the 27 level we were watching. So this 68 here, let me put you guys are always saying, hey, put the level on here. We can't see the level. There you go. So yeah, 68.20. And if we can hold here, consolidate or bounce and consolidate above that, it's a little bit more bullish than bearish. But if we start slipping through here, then I think we might have something bigger happening. And if we start slipping through here, it all depends on the pattern, right? Everything's all this pattern. So if we start slipping through and the counter trends fail, well, then we have something much bigger happening. And then, of course, the targets become the 60-35. It could even, obviously, we can correct much lower. Because I didn't have anything from that 22 low, and it's from here. So this looks more like in a corrective nature than in a termination of the entire whole thing, right? It might not be the big one, right? But it's a termination of this leg, and so we'll have to play out how that corrects and whatnot, and see how we trade that. So that's my take on the cash and the continuation chart. Ben, you want to add anything to that? I know we're going to be looking at NASDAQ and some of the longer term charts when you get on in a minute here. So
No, I think that captures it, that it's a good picture showing, okay, we're here, we're at a decision point, and so far it's turning back, from the 270. That's the key thing that I take away from this picture.
exactly. And we talked about how these levels we're trying to reach up into these levels last week. And that's why, if you guys haven't seen it, it'll be good to go back and check it. Take a look at that. All right, here's the calendar day chart. Again, we get up into the 7,000 area, and this is the calendar day futures, right? Continuation, and very close in timing, just like we saw in the cash. Here's we have the futures, the front month, the daily, not the calendar day. It's the front month. we just sort of rolled over into it. So, I'm just kind of going off that April low. This could be off a little bit as we get liquidity. So, I'm not pinning everything on this, but it's good to keep an eye on it, at least what the current pattern is. So the current pattern is that, I drew these lines out, showed you guys a triangle, and what's interesting is, we came down to the low. The low was exactly on that lower part of the triangle, and this sets up a hell of a thing here, because if we can manage to get up, get above, break to the upside, obviously there's upside opens up. Now, if we get in here and roll over, we take out this trend line, obviously then the downside opens up. And we talked about the downside potential and the quality and the kind of the patterns we want to watch, if it's a consolidation or some kind of a correction, and how to look at those reversals. So for here, we're just going to take that front one. We're going to look at that pattern. Now that pattern is also here in the NASDAQ. Again, NASDAQ ran up into the major resistance. It was at 26,573, but we got close to it, but not quite, didn't quite tap it. That can happen because this is the continuation chart. There's always a little bit of a discrepancy, right? As time goes on, because we're just connecting chart over chart. Anyway, what does work is look at the support level, 25,140. Again, all of these, the contracts we're looking at, we talked about how, hey, if this support holds, we're bullish. If it doesn't, we're not. So bullish meaning this is just a simple correction, end of the year, so forth and so on. And if this 25,140 holds, we can kind of consolidate, gather some strength, and start to go move higher. So the key level for NASDAQ obviously is 25,000, 25,140. Taking that out means we take out the trend line, we're going to lose our momentum. And what that means is now we're getting into some kind of a consolidation or some kind of a correction. So, we already are, but I'm just talking about a simple trend line and how that can indicate what's to come based on the overall pattern. So it's keeping it simple, but it's very, very clear when these things break out or break down. And if you guys go back and check what happens at these sort of the terminal points, meaning when we run out an entire cycle, we get close to these levels or time and price. That's when trend lines really end up working, because there you can't really slip and slide too much, right? You don't have a lot of room to screw around. So if it breaks, then that it actually means something greater. All right, Ben, you want to chime in on this, or?
NASDAQ with the longer term chart so we can take a look and see.
Yeah, I'm really curious because it'll show up there, obviously, right? So
Yeah.
anyway, just to tell you guys, the triangle is here. It really depends how we move out of this at this point. All right, let's jump to the weekly chart really quick. Here's the continuation futures chart, and we got right into the 50% level. That's kind of where we stalled out, and that's at 68.84, 68.88. There you go. So here, basis the weekly, if we can't hold this and we start slipping through, and you really can't, and we start straddling it, but then mostly below that level, that's the signal. So watch out for that. And we have 65.20 that we tap before we're moving higher as a really, baseline, really, really good support. So it all depends where we stop here. And we have daily levels to help us figure that out. Continue to look at that. This is also a weekly chart, but like we kind of did on the cash, I wanted to look at it from the recent, from this year's low, last year's low. And from there, we ran up right 135 degrees up, right into the 7,000 zone. Okay. So this is where I brought up this whole theme about, maybe not end of the entire bull market, but it certainly, we ran into some terminal stuff for this leg. Now the question is, are we going to consolidate and extend the leg, right? That's the first thing. Or are we going to do a much deeper correction, finish off a little bit more business and then move higher? So just remember, just so you guys know, so 66.35 is 50% of the square, very important support. And the next big one is really 62.78, 62.78, 62.80, which is 90 degrees up. And a little bit below that, we have this really solid, big support at 61.61. And yeah, I know it's kind of laughable to even think about that, but we have to know these things if you guys are to sort of plan out the year. And this is a good chart. I think we still have a shot at running back up here in February and tapping this again. We could do 3 drives, make a little bit of a higher high, and then turn. So this thing is still. I mean, I can't. If you guys notice, if you guys follow us, we try to catch these things early on, then we follow through to see how the whole pattern unfolds. So this is very early in the game because we just tapped it. We have a chance to do 3 drives here, so that's something else to watch. So everything will show up on this. So just follow us every week, and when we follow through, this is my new weekly chart we'll be following for this year, only because everything just set up so perfectly at the beginning. And this is our cash chart. So I talked about this last week. How we tapped this 69, 25, 22, this level. And I talked about how, if we tap here, we reverse. This is not, that's not really positive, right? So we reversed. And if you look at the notice where the high of that reversal bar, last week's high it was exactly on this 50% level. And we took out last week's high. So basis the weekly, the cash has a reversal. It's kind of a big deal. We want to notice that because last time it happened, that was, it was in November. You saw the drop that we got from that. So Ben, what do you think of this? This is kind of a classic pattern, right?
Yeah.
Against price.
It's a big deal, especially if this week we take out the lows from last week, because then it'll give you another down bar,
Yeah,
lower low
yeah,
for a
that would
weekly.
that would definitely accelerate things, and that then it would start to look like this, the
Hmm.
pattern that we've been talking about. But anyway, this is important, guys. So 69, this 25, 22, 25, this level, we stalled out we talked about it last week. And then uh, as the week unfolded, even with the holidays and whatnot, it really, that's what came to be. Now, the opposite would have been, we bumped up, ran up, and even if we sold off a little bit, we held above it, right? That would open up the upper square. But you can see the weightiness of the resistance starting to play out that we brought up last week. How, yeah, it's been a good run, but now we're running up against this stuff. And there was a pattern that we picked up, and the pattern was how a lot of the indices were getting very tight into resistance. All right, let's look at the weekly, the 30-minute chart. We missed it the last couple of times. I took out the holiday stuff, so we're pretty much just a price action, right? So looking at that, 69.44 was a key level I talked about all week. Last week going to 28, 29th, you can see that was a key level. And then we started putting in this triangle. And I said, look, we're going to get a false break out of this, and then, possibly we get a flush and then move higher. Maybe trying to go up and tap 7,000, do a false break. But the key level is we want to watch the 69.44. If we get stuck below that, it's bad news. Actually, before that, I talked about the 69.72, saying, look, to keep this going in the sort of the New Year spirit, we need to hold this 72. If we don't, markets are going to get softer. Sure enough, we dropped below that, really never went back to reach it, right? We held 69.44 for a while, then the triangle, lots of fake outs to both sides. Eventually broke through right there. And we did do a false move to the upside, right into the triangle, which is classic. And then the downside action started, right? So here we saw once it broke down, we really couldn't hold above. So that's big signal, right? Weakness, which I pointed out on the daily post. And after that, we came down, ran back up to 69.44. We couldn't even quite get to it, failed, took out everything, and we came down to the next big level, which is 68.70. And from there, we bounced back up to 69.08. And that's kind of where we are. So going into next week, obviously watch the 69.08. If we can get above, we can have a shot at testing 69.44. If we don't, obviously we're going to head down, and taking out the 68.70 just opens up the downside, which now you can see how we can kind of overlay this on top of the daily price action. It all kind of starts to make sense. And I post these every day, and so does Ben. If you guys want to follow us on X, the links are in the description. And if you guys like our work, please remember to like, subscribe, and share the videos, help grow the community. And last year, I think we grew pretty well. So thanks for all that. Thanks for following. Thanks for your comments. All right, so that's the 30-minute. Let me see what else I got here. I have the well, this is the 4-hour. Yeah, that's it. Let's get back on the daily track. Yeah, let me talk about the Dow futures really quick. Here we didn't quite get to 49,484, so that's still holding. Obviously, the Dow now, the quarter square becomes the important thing, 48,323. So let's watch that. 48. Same scenario, if we hold it, great. If we don't hold it, then watch out, because we're going to get down to 47. And if this area really gives out, in here is where we want to watch the counter trends come in. And if they fail below that, same story. Pattern action will be the same as we talked about for the S&P in the beginning. And that sets up with all the indices. So that's kind of the idea. You guys can see we already broke the steepest trend line. So that's a little bit of a heads up. We already broke that, right? So a lot of important signals. And we can also draw this. And that sets up a nice channel. There you go. And we're at the upper end of the channel, so there's a lot of plenty of room to move, and that will be a decent correction. So watch all these things. Let's leave the indices and move on to bonds, see what's happening. And nothing. Bonds were on vacation.
Bonds have been asleep.
bonds are gone. Checked
Yeah.
out. So, but look, the important thing is how this 45 is holding and how we're just consolidating below that, this 116.12, 116 and a half level. And now we have decent overhead. So I don't know. It doesn't look exactly bullish for bonds right now. And if we start dropping here, then take a look at this. We got a trend line. We're making lower highs and lower lows. And if we start to trend down, this is not exactly positive for the market, right? So something could be setting up. So let's watch this very closely. And remember, the key level, this 45 degrees, been super important for the entire year, really. But you can see how it's really starting to get some power, right? Holding the market on either side. So watch that very closely. And let's take a quick look at the weekly. So weekly, you can see the 144 that we always talk about held, and we're clearly trending lower. 114 was the support level on the weekly basis, and we just sort of scraping along. Obviously, taking this out is where the fireworks are going to be. So watch that. That's the easiest way to interpret this. Let's move on to crude. Also, it's starting to look like bonds. So, but here, we're scraping along. We got down to 55. Very interesting, right? And a little bit of a false break. But I think this trend, we want to watch it. I mean, I'm not going to get all excited about anything bullish till we get above 61. But let's see how we finish up. Are we going to get down to 50 and flush everything before everything's said and done? But we'll start to watch this closely. The thing with crude we've been talking about is there is a big move coming. We just have to wait till the market's ready, right? We can't we can't preempt these things. Just like we were waiting on metals, right? You have to wait till things start up before we jump in, but we can see it coming over the horizon. So here, this is just super bullish. I mean, sure, it can go on a little bit longer, but it just is priming, and we're just going to wait and see how much longer. So not much to do as far as trend trading, right? There's plenty of other things you guys can do. On gold, if you catch last week's show, we talked about this 45. We talked about other things, right? But we also talked about this 45, saying, look, that 45, if it lines up with the high, that's sort of a terminal uh, time cycle that terminates legs, perhaps in the short term, but it's definitely a 45. You guys know Gann, 45 to 49 is a big timing cycle. And it coming up at the end of a cycle is a big sign. So sure enough, we didn't quite get up to the 180, but the time definitely turned it down at the 7/8 mark. And we corrected pretty hard. So now support is at 62, 42.65. And if we can hold above that and consolidate, that would be a sign, it's very, very positive. But, gold can correct a lot more. But I think given the pattern, this 42.65 becomes really, really, really important. And then to the upside, we really want to watch this 44.44. And that's really the level we want to get back on top of ASAP. And so what's the big hurry? Big hurry is that we timed out this cycle. We're done with the 45. So if we can't get above this and the next counter trend, other than this counter trend, right, is below this 44 number, gold can be expected to correct, right? Have a normal correction, which has been bleeding, it is on fire here. So fine, let it correct and see what happens. Kind of like the correction here. I mean, that would set up a great free drives going up into 90 if we can do that in March. But in the meantime, we want to watch this 44.44 and this 42.50 level, see how we manage. You going to cover gold today, Ben? Anything you want to add?
That there a couple squares came up on the
Yeah.
monthly, the
Mm.
45-day run that you identified. So there's a lot of timing that's coming in on gold. So we just want to watch the levels to see how the correction plays out. Is it a deep correction? Is it just going to burn off time? And that'll be told through whether it can hold support or not.
Right. So last week we talked about this square 52, the weekly square, this 45 level being the key level to take out or not. And sure enough, we stalled out. Remember, this happened. We hit this level exactly right around the time when we did that 45 we just looked at, right? So it's important. And this is why you guys should write these levels down and mark it on your charts and watch them, because it all kind of comes together in the crescendo when it happens. And you want to be a little bit prepared. Now jump into the square 43.33 is the number 34, 43.34, let's say. This is the number you want to kind of stay above. We already dipped a little below. We closed at 43.32. So the number is 33, 34. We're right at that 50%. So if we started slipping below, basis the weekly, really good support to be 41.25. Obviously, we can reverse immediately, get on top of this, much better. But given how we finished this, I think we're in for a little bit more of a correction than not, right? Something's definitely setting up. And talking about metals and terminations, I pointed this out last week or the week before. You guys can go back and check, saying that this 864 number, we're squaring out right at 81. I even made a joke, if 81 doesn't square it out, we're going to go, why stop here? It's going to go right to 108. And sure enough, right at 81, we had price and time, and boy, did we correct, right? In a big way. And this was on last week's podcast. So now we're at 69. So, big support level. If you guys want to continue with this, it will be 62 level, 62.50 is the next big support level. If we can hold above that, it's great. There may be one more push to the upside. And this would be a, decent shakeout, 62. Can we get to 60? Sure. If it's really a big time sell off, then 58 is the next big level to watch. And of course, we have structural support and everything else at 53. But let's see, the quality of what's happening here. So I think 62.50 is a good number, solid number. So let's watch that and see what happens. But we did call it out. So there you go. It's funny, we called it up ahead of time, and then, I see all this post about, oh my God, silver's down 10%. A couple of days later. All right, I'll do the weekly for silver and copper together, same time. Now, copper, few things happened. We did come up and tap the 120. We did come up and tap this 588, 589 level. We didn't get a false break, but we did, we did run after resistance. That's what that is, 120. We can see how we stalled out there last time. We're here. We backed up. The thing is, all the other metals are having, we're having, silver squaring out gold right up on that last leg. So it makes sense. The metals are sort of finishing up this leg. And Ben, I think you told me you got a couple of other squares on silver, right?
So yeah, we had a 180 by 180 on silver from the April low. There was
Mm-hmm.
a monthly square from the 2001 low. So
Mm,
as you said, there are definitely things finishing up in the metals. In copper, we also did, if you take it from that July low, we did a big ABCD right to the high.
right here. Yeah. Okay.
Yeah, you
It
can
looks.
put
Yep.
that in and you'll see it. So there's definitely something cleaning up in the metals, you know.
Mm-hmm. Mm-hmm. Well, it's probably a little exhausted, right? It's been running. There's the ABCD. So it
Hmm.
looks good. We saw this. We saw price hitting resistance in all the metals at this point. So that's something we saw coming up, right? So here on the weekly, coming off the 2020 low, you can see this 593 level we talked about last week being resistance, and we were kind of hoping for a false break, but sure, what we got was a lower high with all the other things blended into that. So the 535 is the support on basis the weekly, but we did have a resistance up here, which we've been talking about and you guys are aware of. So I think the deal with the metals is, time for a little break and see how we correct. All right, moving on to the dollar. Not a huge move up, but we did get a little bit of, we got a little bit positive. Didn't quite get to the 97 level, which is, this is super good support. You can see how we held it all year. And so for the year, you can see how we basically kind of consolidated below 72. And coming towards the end of the year, we're starting to make higher highs and higher lows. So it seems I say that because of the flush we got here and that terminated the down leg. And my take is that we're going to start making higher lows and trend higher. So let's see how that works out. For now, we haven't quite taken on the uptrend, but it looks like support level is holding. And when we jump to the weekly, you guys will see how, the support level that we had on the chart, we came right into that zone. And this is a zone we wanted to clear. We've had this forever, or so if we can hold this somehow, this 9783 level and start to move up. All right, I think then the momentum can be kept. And this is a huge buying opportunity, right? Because if we can hold here. Now, if we slip through without anything, we have an inside bar, last week. So, it really depends if we can take out the high or low next week. We take out the high, I think dollar's in good shape. We take out the low, then we have a little bit more to go. We can kind of consolidate and sniff out this area, which is 144. I mean, real support is at the square, right? If we're going to really go for broke, we can go down to 96.80 and test that. But it seems like it's in the zone, and 3-4 weeks running, we've been kind of bouncing on that level. So seems like the support is there. Looking at the euro, we are back at the 3/4 level and basically holding below that. And that level happens to be 179.20. So 179, let's say 180, that's the level we're talking about. And I don't know. It just feels like this is a high, and now we're going in for a lower high. We're going to watch this very closely. And long as it's below the 3/4 level, this 180, and I'm going to treat that as it's in a weaker position, right? With support down here at that 1650, famous 1650 level. That's my take. And on the weekly, the 1654 is really still the 50% level. We're kind of straddling in here. I'm just going to leave it alone see what happens. As long as we're above 1650, we want to be a little bit cautious because it's still in a place where we can sit from here. We can always pounce. Um, so it's kind of drifting sideways. We've been on both sides of 1654, which means we're not quite done with this. And we'll continue to watch that. Now let's take a look at Bitcoin. Bitcoin, well, you guys aren't this far into the video when you're watching, we called out this low in Bitcoin. We called out the low high in Bitcoin, and then the low in November. We were looking for some kind of a run up and then a sort of a consolidation before the next move. The key thing here is the low November low held all the way. To me, if a low or high holds for 30 days, it's good to go. So we did hold for 30 days and then a little bit more. And now we have a little triangle happening here. So if this triangle breaks to the downside, it's extremely negative. If the triangle breaks to the upside, okay, we can go up and test the upper levels, and with the potential for a lower high on basis the weekly, right? So that's kind of what's happening. But the circle and the pattern is still holding. Let's see which side the triangle breaks. For now, that's kind of where Bitcoin is. And I'm not sure if you're going to cover natural gas, but natural gas is also correcting. We ran up, and the key there was, if we can hold about this 437 area, which we didn't, and that means that was sort of a pop. And now we're back to, retesting and kind of this whole bottoming out process. But as long as it's above 298, I think it's natural gas is kind of like a prime state, so it can consolidate here, but it's okay.
Yeah, about three
Um,
weeks ago, we called out that 90-degree run and said, be careful, right?
that's right. That's right. Mhm.
And we're getting the correction. I'm not going to cover it today. It's pulling back. I want to see how the correction plays out, if it's a bullish correction or not, and then we can, decide the next move based on that. But we were worried about something ending there, and it certainly did.
Right. I remember you calling out that 90 exactly. Maybe even I think before it happened or exactly right around that time. And yeah, that was fair warning. And I thought we could, I was kind of extra bullish. I thought we might hold above this level and then run up, right? But no, that was the ending, like you said. So now we're in correction mode, and we'll follow through, see how it goes. Hang Seng, not much to add. We're in this big old consolidation phase. Resistance that's 26,230, and 25,000 is support. So we've been trapped in that for the last quarter. So that's that, and that's it for me. Let me put it back to Ben, and we'll continue on.
Good stuff. You can see we're in a transition phase in a lot of markets. And we know what's happened. We just don't know what comes next, and we're trying to cipher that out. And that's
We're trying
I
to
think,
sniff it out. Yep. And then
yep,
it's starting to show some signs, right?
yep,
So
yeah, we're getting clues.
all right, let me put it back to you.
Okay.
Well, what stands out is I see the trend line up, going up off the low in November, and then I see the false break that you've had. So those are both of those things are kind of trapping that little triangular formation, right?
Absolutely.
Mm,
And we've been talking for months now that this 25,720 is the key level, and you can see why. I mean, you just see how price reacts every time it comes near it.
yeah,
Now,
yeah,
the dangerous thing here is we still, unlike the S&P, we still have a lower high, right? We have not been able to make a new high since this, October 30th high.
right, right,
And that's a negative, right? It's something to be concerned if you're a bull, is that we have not been able to make a new high. The biggest battle and the most important thing to watch now is this fight around 25,720. Here we got stuck under and looked like, okay, the bears won, we're going to go, and then we pushed above, do a false break, and now we're back under again. Even on Friday, you can see what happened yesterday. We tried in the morning to get above it and see if we could make some headway there, and it just got smacked right down.
yeah. Now that level is really important,
Yeah,
critical.
until we get above that, the
Mhm,
the odds favor we're going lower.
right.
And that 25,720 is the key thing daily basis to watch. Watch that, and that'll give you it's a great daily bull bear line you can watch in the NQs.
Right.
Um, it looks like we're going to open below, unless there's some sort of crazy news that we open above. So we may get a full bar under here again, which again makes us vulnerable to, more downside. There is support here on the 7/8 line at 25,377 and then 25,000. So if you need to mark other numbers on your charts, those levels are good to watch. But the key one is 25,720. Let's take a look at the weekly. Now, what's important with this weekly here? We talked about this in real time, and now you can see with some perspective. We did a 45-week run high to high, and we did a 30-week run low to high, and the highs are holding. So
Hmm.
those are really good timings, and again, it's not like 5-minute bars we're talking about. We're talking about weeks here. So until these highs get taken out, this is a pretty good, and we also squared out. You can see we're right on the half square timing there from the COVID lows. This is a 90-degree, 45-degree square from the COVID lows. So there was good timing there, both from a time count and squares. We had a good reaction off of that, came right down to support on the 135, and that's the just under 24,000. But we have, it's been sort of a really jagged slog to get back up here, and it's having trouble. We really need to see for the bulls to, sort of get the all clear. We need to see that daily level get cleared. The 25,720. We got to clear that, and then we got to make a new high. And right now we're going on 2 months with no new highs. So it's starting to again become more significant. And you can see the counter trends are, 2 weeks here, then 2 weeks down, then 1 week up, and now we've had another down bar. So that was a 1 week counter trend.
Right.
Feels like it's getting weaker.
Yeah. Yeah.
Anything you want to add here on the weekly? Because I think this is pretty significant.
Well, that's just it. I mean, I also noticed your 292 at the bottom. I mean, that's a harmonic of 22 and a half. So that
Hmm.
lined up from the low in 2020, in timing wise, to go along with your 30 and the 45. So plus the price action for us, how the other indices are hitting key levels. So we definitely want to watch the pattern here and the fact that we have a lower high. Anytime, we have a big termination like we did have at the highs, and then we started to do lower highs, we want to be on top of those,
Hmm.
which is the big warning signal that we started last couple of weeks, right? Talking about how everything's hitting these resistance levels. So,
Yeah, and now it's sort of the first thing if you're looking at the sort of the checklist is okay, at the high, do we have squares? Do we have timing? Do we have cycles? And then when the answer there is yes, then it's okay, do we get a lower high?
right.
And we're starting to tick the boxes in NASDAQ, right? We do have timing, we did have squares, we do have cycles at the high, and now we've gotten a lower high still. We have not been able to make a higher high. So clearly, if we take out this 23,966, if we take out these lows here, then we're in business to the downside.
Mhm.
Then we'll
Yeah,
see
yeah.
some real, sort of like Barry says, slippery conditions will be prevalent. But for now, this is the potential for catching that second leg down,
Yep.
which is the fast one. And so we got to keep that in the back of our mind. Now, what's the bullish case? The bullish case is we just go sideways in here and then we take out this high and then we get on top of this 26,976 and we keep going. And is that a possibility? Absolutely. Because right now all we have is we have a high and we have a low. So far we have the lower high, but we do not have the lower low yet. So taking out these other weekly lows will be, this one here will probably be a very good one to watch because that'll tell you, a weekly low just got violated on this, on this little uptrend we've had. And that's, right around 25,000, 24,916. So this 24, 25,000 area is really, really important. And they're battling. You can see the battle. And you really see the battle on the monthly. Because what are we forming here? We're forming a triangle, right?
Wow, look at that. Hmm.
Just stacking up.
Yep.
And
Reminds me of the
here's,
triangle on that cash chart in the beginning. So
yeah,
this is the compressed version of it, right? The
right.
weekly. Mhm.
And we again we have timing here, right? 47 months high to high.
Wow.
And
Yeah.
and then that's in that, the Gann 45 to 49 dead zone, he likes to
Mhm.
call it. So there is the big level here is 24. So again, the 24 to 25,000, they're battling. And we're just trying to pick up the clues as to which side has the edge, which side has the advantage, and based on that we can improve our risk reward setups and try and get in as early as possible. But for now, it's a battle. Anything else you want to add here on the NQs?
No, we're good. I think the indices we framed it pretty well. I
Yep.
think we're good. Yep.
All right, let's take a look at Bitcoin. Barry gave you a little view, his view of Bitcoin on the daily. Here's again the daily setup. Uh, I'm not an E waiver, but if you're just counting legs, here's one, two, three. This looks like a four. So the possible outcomes are we do a fifth, or we do a failed fifth, or we do a false break and then go again. So what am I watching? I'm watching 85,150. That's the key. Above it, we have a good shot at making higher prices, because 96 and change is the next level up, 50% of the square. If we get stuck below it, it means we're going to go again. And then it's, down into 73 and potentially 62.
Yeah.
But we got to watch this. There's your number to watch on a daily basis. You want to stay above that. Let's take a look at the weekly. Weekly, you can see the battle. That's pretty much month and a half, 2 months worth of battle in here at this
Wow.
89,000
Mhm.
level. When you're crisscrossing a level, if you're new with squares, when you see a level getting crisscrossed, it basically means there's no decision been made yet, and that there is a fight for, control of the next move. And this is the visual here, right, where we've just been actively crisscrossing and sort of winding up a little bit on a weekly basis. So weekly 89 is the key level. Daily 85. Let's take a look at the monthly. Now, the monthly, it's interesting in that uh, so far this month, I mean, we've only had a few days, 3 days. As long as we stay below 93, it means the pressure's down to 74. Last month we had a little push above, so you could say the last 2 months that's been a fight because we've been across the $93,000 level. It hasn't the bar has not stayed on one side. The chances are the only chance for a full bar below this month is on the downside. Because if we push above it, we're still going to have this part of the bar that's below it. So the best the bulls can do this month on a monthly basis are just extend the battle. If the bears can hold a print below 93,000, then we get the pressure towards 74. And that's it on Bitcoin. Anything else you want to add on the longer term charts?
Oh, we're good. Did a good job.
Okay. Let's go to the commodities. It's interesting because we're seeing, things complete like the metals. We're seeing the indices are hesitating at a spot where cycles are there. We're wondering, okay, what's the next move there? And the commodities, we're seeing sort of a mixed bag. There is money coming out of some places, but there's also money going in, and we're going to take a look at three spots where it looks like money is going in, and we can potentially get positioned here. Let's start off with soybeans. We've been on beans, on this move up. We saw this little false break, and then the push higher, and then we got this big move up, and we said, okay, let's watch this next move down and see, where the pullback goes. If the pullback can hold, here was like if we can hold above 1125, it would be super bullish, but we would still be bullish as long as we hold above 1035. Well, look at Friday's candle. Look at that bar, right? It pushed down basically to the 1035 level and then ended up
Reversed.
closing,
Yeah.
yeah, closing at the high. What we want to see is, do we get a reversal early next week, right? Do we Sunday, Monday, can we get a higher high than Friday and reverse this? Then we could say it looks like we have a nice risk reward here and the correction may be over, right? Pulled right back into structural support, sitting on top of 1035, and we could be ready to go again in beans. And that's daily basis. Let's take a look at the weekly. Here's your weekly. The weekly number is 1060. Obviously, we got to close below that, but you can see for the past 3 weeks, it's basically been straddling this area. So ideally, we would have stayed, had a full bar stay above it, but we've pushed below it. Now we got to see next week, can we get back above, and can we, get that reversal on a weekly basis by taking out that high we saw last week? That was around 1077, 1078 area. So that's going to be the number we're going to watch next week. Do we get a weekly reversal that again signals we tested this whole year-long consolidation on the pullback, and now we're ready to go again? 1060 is the key number, 50% of the square on the weekly. Let's look at the monthly. You can see the monthly, we've made a lower low already this month. So that's pressure from a monthly basis. But we did push up here, and we've had 2 months now. December we reversed, and now we've had a lower low so far in January. So we're going to have to watch and see, do we get stuck back in this consolidation on a monthly basis, or can we push up above and get above the top of that little channel, which is around 1080, 1081. We were expecting a pullback. The question was what kind of pullback we're getting. It's deeper than, the most bullish case would like, but let's see how it plays out. And we'll first notice that on the daily, if we get a daily reversal here. And so that's beans. Overall, still bullish. Just now that the correction appears to be done and it's finding support, we want to see what kind of turn we get. Anything else you want to add here on beans, Barry?
No, we're good. We're good.
Okay.
Know where things are. Yep.
All right, let's look at the next one that was interesting to me from a bullish standpoint, and that's sugar. Sugar, we tracked into these lows here, and we got the first move up, right into resistance. There's this resistance here from this channel. But we've been seeing these pullbacks. We did an ABCD down, then we pushed up a little higher, and now we pulled back again. And I want you to watch this to see if we can clear, this area here around 15 and a quarter. If we can get above that, then it looks like, this sort of rounding bottom will be completed and we'll be ready to move. It could fail here too, right? Because we just rallied back up into resistance. If we start taking out these lows, like this low here, or obviously this low here, then it's not done yet.
Mm-hmm.
But I wanted it on people's radar because, we started doing this structure of where you're getting these higher lows and higher highs, and then sometimes you get this big move coming out of here when that happens. But we really need to reverse this coming week, and hopefully take out these highs that we made in this 15 and a quarter, 1530 range late last year. Let's take a look at the weekly. Here's your weekly, and you can see why that 15 and a quarter, 1530 area is super important. Right? We had a reversal today. I'm sorry, this past week we reversed. But we want to see if we can get above 1537, we'll solidify this bottom. But until we do that, it's still suspect. There's lots of timing in here at these lows, which is why I was, kind of excited about, when these lows came in. Now we just got to get above this weekly half square to really get things going. So 15 and a quarter to 1530, 1537 is really, really important in sugar for the bullish case. Let's look at the monthly. Here's your monthly. So far, we're inside this month, only a couple days. We did reverse last month. We made a higher high. So the month we do have a monthly reversal. Now we'd like to see us make a higher high. Again, the key number here, 1534 was the high last month. We want to print higher than that. And then the monthly will be, sort of supportive of a bigger move. And that's sugar. So sugar is early, but it's one to watch because the formations are such that if we do actually get a turn and can get above this 1525, 1540 range, we could see a pretty good move. Anything else catch your eye on these sugar charts?
No, we're good. We're good. I think that's a very good frame, and we're set up. We're ready.
Now it's just watching what price does, seeing if we can
Yeah.
clear that level.
Yep.
Last one we'll look at is cocoa. Cocoa, we tracked into these lows. We actually traded it on the short side, saw this low, and once we got above, made this push above 5,700, and you can see it here coming out of the low. We stalled at first at this 90-degree level, which is 5,700, pulled back, pushed above it, and now we're sitting on top of it, Barry. And that's the kind of price action you want to see, right? Because it
Yeah.
easily, structurally, it could have stayed below here, and then it would have said, okay, we got more to go. But once we pushed through and sat on top, which is a very similar setup to where we are in sugar. Like if you covered this part of the chart here, this is where sugar is, right? It's tapping
Right.
this level below the structural resistance. Now if sugar can push up like cocoa did. I'm looking actually to see if we get a daily reversal next week to trade this thing to the upside. Because you can see from here, there'll be a little resistance here at 64, 65, and then at these highs around 6,700. Otherwise, I mean, we got room to run to 71,
Yeah.
7,200.
Yep. Yeah.
So this is cocoa daily. Let's take a look at the weekly. Here's your weekly. Coming out of the hole, we had a nice move, couple inside bars, and then last week, a reversal bar higher. So let's see if we hold this 57.31 on the downside, then again, we can get a push higher into this, 6,900, 7,000 area. You can see there'll be resistance there, but it's setting up for a decent trade. Here's your monthly. You can see the key level here on a monthly basis is we got to stay above 5,900. If we stay above 5,900, we open up 7,000. So that's cocoa. Any comments on cocoa? Anything you see catches your eye?
Well, looks good. Watching 57, waiting to that almost looks like a reverse head and shoulders, right? So if it flips
Mm-hmm.
over 71.38 is definitely where we're going. And that upper trend line is the thing to watch for the momentum to pick up. But yeah, we're holding the lower end
That
nicely
one.
so far. Yeah, that one right there.
Mm-hmm.
So either way, it's going to be a big one, right?
Yeah, it'll be a nice move. It'll be a
Yeah, it'd
nice
be a
move
nice
coming
move.
out of here. So we'll watch it for that reversal this coming week, see if we get it. Coffee, we talked about a while ago. It's sort of set in and set an interim bottom and it's rallying. I'm looking probably in late January, early February for the next short setup in coffee because it's playing out a pattern that, I'm tracking and as it gets in a position where it's actionable, I'll bring it
Mhm.
up on the show.
Mhm.
And that's it on the commodities.
Very good.
Otherwise, I think the main theme of the show and the main theme in the markets is the calendar's changed and things are changing. Things are shifting. We got to watch price action. We watch the cycles to give us an idea of these windows of when the shifts can occur, and we're in them. And now we're watching price action to see, what's the most probable outcome of this shift? Like what's next, right? Something finished, something starts, and we're trying to as early as possible in the move identify what are the probabilities of the most likely thing to happen coming up in these markets. Anything else you want to add, Barry, just sort of as a summary of where you see things?
No, no, I think we did a good coverage. Summary wise, just to notice how we tapped resistance in cycles, how multiple cycles hit metals and the indices at the same time. And I'm noticing, while those are topping out, we have bottoming sort of signals in the dollar and potentially crude, right? So
Hmm.
just watching how these corners are coming in and how they're shaping up. So we'll see. Now we kind of take it week to week. That's what's kind of on the horizon. The pattern is mainly the indices hitting, from different places squaring out. So that's a big deal to watch closely,
Yep.
especially
So
if you
now
want to
it's
catch the early part of the move, right?
right. Now it's zeroing in on the price action to, to get in a spot where there's good risk reward and the odds are in your favor for success.
Absolutely. And if you guys, aren't following us on Twitter, you guys should do that because we post every day and that helps fill the gap between the weekly podcasts, right? So that's something to do.
Absolutely. Listen, everyone, have a great, we'll wish you a great 2026. Let's get off to a good start. It always helps to have a good start and not have to dig out of a hole. So let's find the good setups. Let's make good trades and have a great year. And thanks for your support and continued support in helping us grow the channel this year. We appreciate that. Take care, everybody. We'll talk to you next week.
All right. Thanks, Ben. We'll talk soon. Bye bye.
Take care. Bye bye.